Atlanta Fed President Raphael Bostic just told us the risks to both sides of the Fed's mandate are coming back into balance. That interview came ahead of this morning's main event, a 10 a.m. Eastern speech by Fed Chair Powell. Joining us now for more is Roger Altman, Evercore's founder and senior chairman. Roger, it's great to have you here. This has often been a time that I think it was last year. Here was the quote, 2 years ago from Powell in Jackson Hole, thanks to Bespoke. We will keep at it until we are confident the job is done. Of course, then he was talking about inflation, and the market has often had kind of a soggy reaction to his Jackson Hole remarks. But is it potentially going to be very different this time around?
A little bit different, because I see the Fed right now as labor first, meaning that it's more confident on the trajectory of inflation than it is on the trajectory of labor markets, and at the margin, more concerned about labor markets underperforming than about inflation underperforming. Inflation, after all, and I listened carefully to Mr. Bostic's remarks, is trending just toward where the Fed would want. Is it a guarantee that it hits the Fed's 2% long-term target? No, but it's got momentum towards that. Core PCE ex shelter is already at 2%. Labor markets are a little more volatile. We just saw that large revision, which means that average monthly job growth has been slower than we thought it had been. And it's very hard to pull off a soft landing the way the Fed is trying to do, although they look like they can do it. So I think at the margin, the Fed is more oriented toward labor markets, which means more inclined to cut. And I do think that the basic scenario of 3 cuts, 25 basis points each between now and the rest of the year is the base case.
Yesterday we were having this debate about whether they should cut by half a point. And a couple of reasons for that would be, number one, that rates are so much higher now that kind of as a percentage of where they are, it's not as big as it might be later on if you had to do more of playing catch up. And maybe more importantly, inflation expectations are down 60 basis points into spring. Michael Darda was making that point. And Bostic himself just said to Steve that passive tightening is not the Fed's goal. And passive tightening via lower inflation is, quote, is a thing. So inflation's coming down. Inflation expectations are coming down. Even as he said, his inflation dashboard is flashing red. I mean, you could make the case for a half-point cut as potentially leading to a better economic outcome, especially if you need more hiring right now.
Yes, but I think if the decision were today, the September 18th meeting were actually today, it's much more likely that they'd do 25 basis points, because they'd like, I think, to be consistent and smooth about it if they could. And so I think that's more likely at the moment. But if we see, for example, a disappointing print on jobs and the unemployment rate and other aspects of labor markets, yes, 50 basis points could come into play, as you suggest.
Hey, Roger, we had an interview with Senator Warren, and I went back to the way that the price control or price gouging, whatever you want to call it, the way that was received. And I think it was fair to say that you had some criticism from both sides of the aisle. I had the Washington Post said it's a gimmick. We need real solutions. Jason Furman said not only is it a policy that won't work, it could actually be counterproductive. I just want you to weigh in on it. I mean, we can acknowledge that the pandemic caused supply to be tight. There was a lot of stimulus that caused demand to be very high at the same time supply was tight. That's enough of an explanation right there, I think, for what happened. Do you think how much of the 40-year highs in inflation was caused by corporations taking advantage of that situation and being able to gouge on prices? I'm just wondering if you're someone who thinks...
In my view, Joe, very little. It is true that grocery margins during the pandemic rose above long-term historical levels and haven't fully returned, haven't fully come down.
They're at pre-pandemic. They're at pre-2019 levels. My colleague Sarah Eisen.
I've seen other data, but
what are the margins now?
In any event, my answer is very little. But
very little.
And I also view the proposal, the first ever ban on price gouging at grocery, I view that essentially as jawboning. That would not pass the Congress, whatever the makeup of the Congress is. The Harris campaign knows that. So it's a form of jawboning, which is a very old, tried and true technique, essentially saying we're going to watch very closely as to the pattern of grocery prices. But let's step back a second. I thought that she struck last night a bit of a surprisingly centrist tone. She was very hawkish on border security and on national security. Send me the Langford bill, I'll sign it. And her comments on Ukraine, Iran, North Korea, very hawkish. Her comment on lethal military capability. And then her basic proposals, an expanded child care tax credit, deeper incentives to increase the supply of housing in this country, an expanded earned income tax credit, including low-income childless workers, and finally, continuing the enhanced subsidies for buying insurance under the Affordable Care Act. These are very appealing to the middle class. I personally see them mostly centrist, and she stayed away from some of the flashpoints.
Right.
Whatever I might think,
so
there wasn't much emphasis on climate,
Yeah.
for example.